The broadcast is now starting. All attendees are in listen-only mode.
Hi, everyone. I'm Dale Pinkert. I'm your moderator, host, slash facilitator here in FACE. Happy summer, everybody. Let's have a great summer trading season. Today's the solstice. Good time to get started. And warriors, I've seen a lot of websites before, and a lot of them look clean, and, they have very good graphics. But, every once in a while, you have to say it's a work of art. And I think that's what our developers, under the guidance of Steve Volge, have come up with the new design for ForexAnalytix. We've invested a lot of capital in it. It's because we put you first. We want this to be the only page that you have to be on. You could have your charts. You could have a Twitter feed. You could customize it by turning on and off different alerts and links. So, very nice website. So at the minimum, you owe it to yourself to at least get a trial. Okay, you're going to want to get a trial here. It's going to be on the home page. So you get all this for 10 days to learn how to navigate it for $1. And the timing of this pitch is critical because I know that we're going to come up to market rates of people that call themselves competitors. So you get in now, you're grandfathered in for as long as you trade and want to be with us here at ForexAnalytix. And then if you're overseas, we have a rebate program through our sponsor, Forest Park FX. Can I please add an option to make the payment via NetTeller? I'll talk to Steve and Stelios about it. Okay, I'm not sure what the only payment methods are for depositing accounts, to deposit into accounts. Dale, you want to press settings. Click. Oh, okay, thank you, Steve. Steve busted me. Anyway. I want to show you. Look at how these balls go around in circles like that. Oh, that's my profile. Steve's typing me. Anyway, like you guys, I'm going to have to get a little bit more familiar with it. But it's really beautiful. So check it out. It's a $1 trial. We have the link up here in the room. Okay. And if you're overseas, you can end up having it for free through a rebate program. Get hold of Trent or Justin at Forest Park FX. We have a link for them too. Perhaps you're not happy with the spreads, a little shaky about the security of keeping more than, a few $1,000s at your broker, which limits your... Yes, Steve, hi.
Good morning. We have Justin tomorrow as well, right? If I remember.
Yeah, Justin's going to be with us tomorrow. Correct.
Yeah. Okay. So I think that Justin is going to be, the man to actually explain everything in detail.
Okay. I won't waste any more time then. I'm looking for a no, it's all right.
I don't mean that, but I mean that, everybody that...
Okay, everyone show up today. That's at investing.com. That's here today. Show up tomorrow because we'll have one of the principals of Forest Park FX here. And what I like about them is they don't just represent one broker. So they know the brokers on this side of the pond and what's happening in... I'm not muted. Maybe you need to log in and out again, Ashish. So they're a broker of brokers, like sometimes managers manage other managers. So let's get to the markets just a little bit. Features to me, of course, we finally cleaned out the low in the euro, cleaned out this low. There is some divergence, I can't be in a hurry to buy this thing. There are fibs lower. I know a lot of people are talking like 14 and a half. I have 1454 is halfway back of the whole move that we had last year. But I think it's really getting late to be shorting it. As you could see on the 4-hour, we're not confirming here. We may not have even made a new low yet. The low here was 5102. Tell I'm doing something now. Yeah, we still haven't taken the low out. And that's with successive new highs in the Dixie, right? And the Dixie is not confirming up here. Maybe this, I'm counting this as a drive 2 up here. 1, 2, and thinking that what we have happening in 2 now is 1, 2, 3. So between here and 96, I'm expecting a peak and then another pullback, maybe like this. The long shot call for a formation, when you look at the weekly, even though we've taken out this neckline here a little bit, would be the dollar to really have a more severe correction back down to 92. It could put in a right shoulder down there. And down here, you'll probably have excessive euro bullishness, just like you're starting to get some excessive bearishness here. So this is what I'm looking for. We could just continue, but I'm thinking with what I'm seeing on some short-term RSI readings that it's starting to get heavy. I believe Greg has a 9620 target up here. Some other guys I've talked to 9580, so we're close to something counter trend. And I just want to bring it up. It doesn't always work, but Gann used to really pay attention to the change of seasons. Markets going up into a change of season could also mean a change of direction. Doesn't have to happen right on the day. It could be a couple days either side. A lot of these cycles are like that. So I think the next trade, instead of trying to get the last piece to the upside here in the dollar for this move, would be to look for short entries. So that's my bias. Actually, and some pretty strange action in the indexes last night. Last night I was up till about 8 o'clock, and I was watching the S&Ps. They were up here. I don't know what happened last night. Plus, you got that big pop in the yen and the Nikkei. And, since I'm bearish, the yen and that bearishness is being tested here. We start closing back over the 70 area. Looks like we could make a move for here, attempting it though. Maybe the yields come off, but pretty lousy action from where we were last night. Also, I wanted to point this out. So when Blake and I were talking early in the week, he showed the weekly NASDAQ 100 and said, yeah, this is a third drive. We were here. Okay. So yeah, we had the weekly divergence. We really don't have much daily, but I'd say we do now. Still a pretty high reading, up around 70, but you could tell just by a shade, it's under today's reading. 4 hours, pretty glaring, right? Here's your confirmed high. Here's drive 2, and here's 3, way under 70. So even if we made another move up towards 73.50, which was the number I was talking about, I don't think the 4 hour would confirm. And the 1 hour did confirm, which I like them not to. So I think this time, if we just make a marginal new high, the 1 hour will line up with the rest of them. So pay attention to the NASDAQ over 73.5. I think we could be setting up something significant. Here's 1, here's 2, and here's 3, and here's a fractal. Okay, so here's 1, 2, and 3, which is a fractal of this. Everyone see that? You like that? You got change in the MPZ official bank rate votes. I think the pound is really due for a relief rally. And isn't that what we're getting here? That's a pretty nice candle. Why can't we rally back to 35? I mean, that would be a marginal retrace from up here. Call it 44, call it 13 handles. So 5 handles back would be about 38%. There you go. 35.40. That could happen. And Dina, on the treasuries are a little more iffy, and then I'm going to turn it over to Blake so he has some time to talk. I'm not sure if there's any data. My Wall Street Journal, my dog has not brought up my Wall Street Journal to the door yet. I wish I had a dog that could do that for me. Let's see. So I think that's Dina wanted to know about yields. Okay. You know, I'm kind of torn here, Neil. Dina, we failed at 61.8, but it wasn't that deep of a pullback. If I'm wrong and the stock market keeps blowing, we could get another test of this up here. It's like 3% on the 10-year yield. And that would kind of be like a 1, 2, 3 up here. But I don't think we're going to take out the highs in yields. And I still believe we're going to take out this low. So, but, you know, you may have to sit through something like this. Okay. I prefer it just broke from here. And the daily looks like a descending triangle. Or I was looking for something like this from here that could take it way down. But, you know, how many trades give you when you're a position trader and you're looking for a big move? It's rare when you do it that day and then the big move ensues. You know, as a position trader, you have to, you know, live through drawdowns, and you rarely get immediate gratification on position trades. At least that's been my experience. If you're that great, my hat's off to you. But normally I'm early, and that's why I piece in instead of going all in and all out. But I still think this is a high. And I'm predicating a lot of this on that we get a break in, you know, the S&Ps, you know, the daily's starting to look a little negative. I think it's going to take a risk-off event, at least to take maybe the S&Ps take 100 handles off or so to get the bonds rolling again. That help? I hope I haven't stolen any of Steve's questions. So you guys come up with some more questions here. And really encourage you, I really encourage you to subscribe to our service. Really, this free room that you have, our sponsor at Forest Park FX, they're the reason. So call them for some advice on your broker. There's no law against having several accounts. I mean, I know a lot of people that have more than one FX account. How about you guys? Any of you out there have more than one FX account? Give me a Y if you do in the question box. Kareem does. Okay, see? Most people do. All right, Blake, how you doing, buddy?
Great. How you doing?
I rambled, huh? I was rambling.
What's that?
I was rambling.
Yeah.
Babbling. Yeah.
You were babbling a little bit, and happy Thursday to you.
Yeah. Happy solstice, buddy.
Yeah. Look at you. As Delio said, it comes around so quickly.
Yeah. Well, the sun's not up here yet, but let's have a great summer in the markets with everybody and our business, and you know, let's kick butt.
Yeah, let's do it. Let's do it. So how's it going over there? As I explained to you earlier, I'm going to see one of your hometown bands tonight. I'm going to go out, actually make myself a public appearance
Spectacle.
out of the and maybe a spectacle too, out of the house, which I
Oh,
don't
that,
normally do during the week. So
that sounds like fun, man. Reggae, is it outdoors or indoors?
it's outdoors. It is they have a very much of a reggae type of vibe. But man, it's going to be hot outside. Hot, 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 hot. Anyway, let's
make some money to pay for it here.
well, it's going to be a little tough. I mean, first of all, there's a few things a few obstacles that are in our way. First and foremost is obviously the trade war, or lack of information on the trade. Oh, we can call it dispute. You can call it whatever you want, but the lack of information out there on what the current administration is going to do ahead of the tariffs being implemented on July 8th. That's like, I was talking with the guys and gals in our office, or the gals, there's no gals in the office in Greenwich. Sorry, the guys in our office, is that, these tariffs implementation looms going into July, the less information we hear about any negotiations or give up, the more the risk is for a turn lower in risk appetite as we approach that deadline. So, basically the market's approaching everything right now with the assumption is we're going to work something out, with our trade partners, whether it's China or the European Union or Canada. But, as we get close to this date,
I think it's July
a little bit more
6th.
nervous.
July 6th, I believe tariffs will go into effect.
Right, but really, you have over the weekend, right? So you're talking about the 8th being Sunday.
All right.
So yeah, but you're talking that end of that week, the 6th through 8th. Okay, we can call it. The market needs to hear some concessions over the next couple of weeks, and if we don't get it, then the market might start to price, because we believe, and I agree with this. I say we is from the office that I trade from. We believe that it's not priced in to the market. The market is very much nonchalant about everything that's happening, and like I said, that coming with the attitude that there's going to be some concessions made, and we're going to avoid a lot of these tariffs and back and forth. But I was just reading a note from Goldman Sachs that I put in our chat room this morning about they expect things to accelerate, not decelerate, accelerate. So the market hasn't really priced in a lot of those risks. But
I agree.
But
I mean, a 13 VIX, of course, that's pretty complacent.
It is. Now, that doesn't mean that today you start just shorting stocks. I don't know if that's necessarily the case. We are dealing with the World Cup. We've got a lot of great matches that are happening today. And I mentioned this yesterday. And yesterday was literally like trying to trade during New Year's Eve. That's how bad yesterday's trading was. It was 10 pip ranges. It was horrible, and I expect a lot of the same today. If you read the analysis, and I actually had to send out an alert with ForexAnalytix. You get these like bell notifications here, or we get bell notifications. We have bell notifications that alert people if we're having any issues with our platform. I actually sent out an alert that went out into the updates or alert history here. Overnight analysis contains a lot of no change in analysis. This is due to summer trading in the World Cup. I mean, World Cup, for those of you that don't know, if you haven't traded through a World Cup before, it's paralyzing to the market, because you have I'm not watching CNBC right now. I'm watching the Denmark-Australia game right now.
Nice goal by Ericsson, by the way.
Yeah, it was. It really was, actually. I actually looked away from the TV to do something, and I looked back. And I'm like, "Whoa, what happened?"
And
'Cause I
by
have
the
the
way, Blake,
volume down.
speaking of the World Cup, in less than 6 hours, we have the Argentina versus Croatia game. That's going to draw a lot of attention. So I'm really not expecting anything to happen,
Late in the
past
day,
that.
yeah. Oh
Yeah,
God,
yeah.
it's going to be
Yeah.
nuts. And the problem with the currency
When's it
market,
over?
Steve?
The World Cup, you mean?
Yeah,
Yeah.
like 2 weeks, right?
Yeah, it's like a couple of weeks more. Usually, it lasts a little bit less than a month. Usually, but I need
Oh
to
my
remind you here
God.
that after we go through the first phase, the group phase,
Yeah.
it's not that we have like three, four games each day. So the games are going to start spreading out afterwards. So the impact is going to be much less limited on an intraday basis.
Okay.
Yeah, and I mean the price action is horrible, and if you look at the tight ranges that we've seen just over the last 24 hours, I mean you got some of these currency pairs like you take the Aussie, and the Aussie is actually one of the bigger movers right now, but it's still you're talking less than 50 pip trading ranges.
Yeah, even Canada, which was on fire, is like
it's completely
EKG of a dead guy now.
It's grinding to a halt. Now that doesn't mean that we won't get volatility. Obviously, people like myself and we're waiting around for just some sort of headline to provoke a movement. And so what I have been doing, and what I did last night, for example, is I shorted the U.S. dollar Japanese yen at 61. I put my stops above, I shorted at 61 last night. I put my stops above 111. We were down at 35. I didn't cover when I got up this morning. It got back up to like 49 and I covered. And I took 10, 12 pips off the table, whatever it was. And I just shorted the US dollar Japanese yen moments ago at 59 and it's at 53 right now. And I'm probably
going to take
just closed out my position.
Yeah, adapt. Take what market conditions give you.
Well, that's adapt. The thing. You've got to be able to take just little bits and pieces. I mean, if you look at my P&L from last week going into this week, I'm not exaggerating, and fortunately, I've been positive for the last like 5 trading days straight. But my P&L has dropped to 1/8 the size it was last week. So last week let's say I was making, I'm just using this as an example. If I was making $10,000 last week per day, I'm down to making like, $1,500 today. I mean, that's basically the ratio that we're looking at as far as my P&L goes.
Oh man, baby needs shoes.
But I'm just saying that you have very little opportunities. So you got to be able to take little pieces off when you find them, because if you're expecting some sort of blowout move right now, unless we get some sort of
they can happen.
Yeah, they can, some sort of news event. And frankly, I missed the cable. I missed the cable because I didn't want to play it while it was below 132. We've been in a downtrend. We've been looking for the pound to continue to break down even overnight before we have this pop up to 132. We were expecting a move down to the 127% extension to 131. 131.30. If you read the analysis from last night, the pound dollar closed below the 132 level, which should keep the bearish trend intact, and a move to the 131.30 level looks likely. That was last night's analysis. Yeah, I mean, we got down to 131 and change, and then we popped back up again. And if you weren't, you had to have been trading counter trend to take advantage of that. Hey, Dale, do you guys can you guys hold down the fort really quick? I gotta flip it over to you.
You've locked in somewhere at Chihuahua or something there.
Yeah, I've got my dogs are going crazy, and it's 5:24 in the morning here, so I need to go.
Go ahead, buddy.
With them. I don't know what they're. I'm gonna flip it over to you, Steve. Sorry about that.
I'll give Steve a hard time.
Yeah. Absolutely.
How are you, Stevie?
I would have been better if Blake stayed a little bit longer, because Denmark seems to be pushing for another goal.
I think that's supporting gold because it's about to put in a nice candle. And I'm not always friendly gold, but we went to the 78.6 level, Steve, on the daily from that home move. In fact,
Yes,
took
yeah.
78.6 out. I mean, we've had a $100 move in 2 months. Why can't we rally $20?
You're actually absolutely right. But since Blake didn't manage to finish what he was saying about the cable, and since the cable is
grab the screen because about my commodity, what's.
And I'm gonna show you everything about gold just after that. But having to do with the cable, for those that didn't see, we had a 6-3 vote. So three descendants voted for a hike in the BOE. One of them being the chief economist. So that points to the probability of the BOE tightening monetary policy sooner than the market was expecting. And if you remember, Dale, yesterday I spoke about the cable specifically, saying that people should not be trying to short the cable simply because to me it looks like the next move is going to be higher. Now, if it would happen from here or a little bit lower, it's a different question. But I mentioned that we are currently on a confluence of supports, which is the 50% fib from the post-Brexit low to the recent high that we had at 140, almost 144, let's call it. And it's also, if you see this blue channel here, I was monitoring this ascending channel for quite some time. It acted multiple times as resistance, support, and even after we broke above it, it started acting as support again. And the extension of that trend line support came in exactly at this area. And we're seeing the cable today, if I zoom in here, so far posting an outside white candle. And if we actually do close below roughly where we currently are, like 132.20, we're also going to have an evening star formation here. Sorry, a morning star formation here, which is a bullish reversal candlestick formation. Okay, so
some good confluence down there, Steve.
Yeah, very nice confluence here. I mentioned it yesterday on the webinar as well, Blake, and I said that if we don't find support here, I would also be looking for the psychological level of 130, which has also acted multiple times as support in the past. But regardless, I warned people that, in my opinion, the cable is approaching levels that we should probably be looking to buy it for a stronger bounce than actually trying to sell it. Because, if you sold like cable at 131, 131.50, where would you place your stop, right? And of course, I'm not talking about scalping setups. I'm talking like on the daily chart. We're seeing a very nice reaction so far today. And obviously, the 133 area is going to be a very strong area of resistance. We will have to clear that to actually get confirmation that we're getting some kind of a bigger rebound. But if that happens, I would actually be looking for 136 to be tested in this occasion, because as you very well mentioned, Blake, the previous bounce for the cable was extremely shallow. Let's.
I would say we have to get well above like the 132.50 level to for me to be convinced. And frankly, I mean, you're trading counter trend, not so much. Well, you can say counter trend to the pound, but counter trend to the dollar, which the dollar has been relentlessly strong. So it's a tough trade.
It is. But you know how it is. I mean, at some point, nothing moves in a straight line, right? And there will be an occasion, there will be a region, and sometimes news start piling up suddenly in the opposite direction. Yeah, mate.
I'm sorry, Philly Fed and jobless claims are coming out here momentarily. I'll tell you as they come out. They're coming out just in about 15 seconds. So we have Philly Fed. Okay, so initial jobless claims came in line. Continuing claims a little higher than expected, and Philly Fed still not out.
Canada wholesale trade sales 0.1 versus 0.3 expected. So that's an underwhelming print as well.
Still waiting on Philly Fed. Ooh, that's a miss. 19.9 versus 29 expected. So that's a little weaker than expected as far as Philly Fed goes.
That's quite a strong miss, actually. Yes, indeed. Let's actually have a look at the DXY, since you mentioned it before.
No reaction. I mean, the dollar index is, I look at the dollar yen, it's just sitting there. It's not doing anything. Hey, one other chart really quick before I let you take over. You guys got to watch the Aussie dollar. The Aussie dollar it held basically 73.40, 73.45 overnight. That could it go like an hourly chart. You got a little wedge, little wedge there. There you go, little wedge, and if it breaks up above like the 80 level, you might get a double bottom. Maybe take us back up above 74. Like literally, I have nothing else to look at today, and I'm looking at things like this. So that's
and we also see some very clear. Since you mentioned the 1 hour chart, there is also some very clear RSI divergence. I mean, we started diverging actually several days ago. If you see, at the 15th of the month. We're still diverging. So yeah, that might be a good indication. There is some obvious momentum loss having to do with the bearish momentum. So yeah, absolutely. Why not see a bounce from here? To be honest, if I go back to the daily chart, we almost made it to my next target. I had said, since we were testing this bear flag support, I had said that if we actually manage to break that on the 75 cents level, the next target would be the 127.2% extension of the last move higher, which comes at 73.26. So we almost made it there, and who knows, we might actually see another push to the downside, and we might make it there. In which case, indeed, it's going to be probably time to see some kind of a reaction higher, even if that ends up being like simply corrective.
Well, and remember the Aussies purely a move based on trade right now, and the reason why it's gotten just pummeled is that the high tensions between the U.S. and China, and so any bounce right now, like let's say we get an intraday bounce and it gets above like 73.80. You can't expect a lot out of it. If it gets back above 74 cents, like 74.10, you gotta be looking to sell it again, because bounces should be fairly limited unless there's some sort of news that China is making some concessions. And but if the hard line on trade continues, then the Aussie the natural path of this pair is lower, but you got to look to sell rallies versus trying to short it down here after having such an aggressive move over the last few weeks. There's no sense in trying to be lower. So.
And people shouldn't also get out of their mind the long-term picture, which is that actually the Aussie broke below a very long-term pattern. It came up, it retested it, it failed. So any way you look at it, any way you slice it, I think that we have to remain bearish until proven otherwise, and not the opposite.
Yeah, exactly. All right, Steve. Well, hey, good luck with the rest of the pairs and the analysis, and Dale, have a great interview today.
Same with you, Blake. See you later, mate.
Thanks, Steve.
Okay. So, we already covered Aussie with the help of Blake. Let me go back to the pound pairs that I was talking about. The second pair I wanted to show here is obviously the pound yen. Quite a popular one. Now, I'm not really sure what's happening here with the pound yen. I'm sure that I remain bearish as long as we trade below this broken formation we came up, we retested it. Now, is this going to form some kind of a triangle and eventually break lower? That's one probability. Is it going to come up post, a higher high from this one, like form some kind of an ABC, retest this broken trend line a little bit higher and then resume lower? That's another probability, right? Regardless, I think that the pair remains, in sell the rally mode, whatever kind of rally we manage to get here. So nothing really has changed with that. Now, let's go to the other pound crosses. One of them being the pound Aussie. I had specifically marked here I had shown on the webinar that this bottom was also an inverted head and shoulders formation. Let me go down to a 4-hour chart. You can see it more clearly. Here it is. Let me mark it. You see, this was an inverted head and shoulders formation. We broke above it. So let me go back to the daily so I can. And I said that, once and if we actually do that, a level to be looking for at a rebound is actually this horizontal support resistance area that comes roughly at 179.50. This is also the 50% fib of the move lower that we had, right? So, the easy move of the rebound has already happened, in my opinion. You should be quite careful from here because, the chances of some kind of a rejection from here, worst case scenario, I'm going to extend this range from there, is quite likely to see at least one more leg lower for the pound Aussie. So, pound Aussie, a very nice rebound. RSI also worked out the overbought conditions, but I would become quite more cautious here. Pound Kiwi, same situation. Having to do with that, we saw a nice rebound from a quite significant area of support. In any case, as long as we trade below 194.50, I think that, seeing one more leg to the downside from somewhere there is a decent probability, right? So keep that in mind. In bottom line, I wouldn't be actually buying those pairs right here, right now. Pound CAD, quite a significant move lower. I think that, there is at least one more leg to the downside here as well. Now, where would that come from? Perhaps from somewhere there. Okay, so far so good. I mean, the rebound is ongoing. We had some early indication with, if you see here on the daily, we had some clear RSI divergence. There it is. This one is playing out, but I would expect that eventually that's going to fail, and we're going to see at least one more leg to the downside. Right. So far, it remains strong though. So, and one more thing I want to add here. Obviously, both the pound and the Canadian dollar have been rather weak, lately. So in any case, I don't think that you should be looking to be buying or selling crosses of week to week or strong to strong currencies. It's a better idea, if you want to have more conviction and a higher probability that your trade is going to work out. It's rather smart if you find a strong currency and buy it against a weak currency. As I said, both of them have been rather weak lately, so I don't think it's the ideal cross trade to be looking to trade at the moment. By the way, I just got a notification. Australia scored back, so Denmark, Australia 1-1. So let's go. Now that we covered the pound crosses, let's have a look at a brief look at what's happening with risk. So far today and overnight, we saw an initial move higher, but this has already failed, having to do with the S&P. We have to note though, first of all, that the Nasdaq posted even intraday, after hours, a new all-time high after yesterday's all-time high closing level. So, Nasdaq remains quite strong. I remind you that one probability that we were looking for, and that's why we were looking for higher levels, is that this might be some kind of an ascending wedge. And, you need to notice here that we've started seeing some signs of RSI divergence. There it is. You can see that the price is actually posting new highs, but the RSI for the time being is diverging at overbought levels. So obviously the upside momentum seems to more or less be stalling, which means that, and we are also approaching like the 127.2, which means that I would be quite cautious. I would definitely not be buying here, but the index that has definitely overperformed. And if you remember, I was talking about that probability, some time ago, is the IWM, the Russell, and it's now almost at the confluence of resistances that I had set as a target, which is the 100 and almost close to 172.
Yeah, nice
Yeah,
fall.
which is which is the 161.8 extension of the last move lower, and also this this channel of
Wow.
resistance. You can see. Yeah.
You got to
So
short. You're going to short it up there, aren't you?
you know something, Dale? I might actually do so because
You know
I
what
don't know.
else, Steve? You know
After
the Russell likes
after
the
this
dollar
rally.
rally too.
Oh yeah.
All right, so if we're near a correction point in the dollar, there's a kind of a background thing that could work in your favor.
Yeah, absolutely. And you know
Okay.
something, one of the reasons actually that we are seeing, if we want to take it on a macro basis, one of the reasons that we're seeing the Russell during the past several days overperform the rest of the indices is the fact that the market, in my opinion, mistakenly believes, and I have to stress out here, mistakenly believes that even if we get a full-blown
Right.
trade war between China and
Right,
the
because it's
US.
all domestic here, and it won't be.
Exactly.
Yeah, right. I know what you
Exactly.
mean. Yeah,
Exactly. They're under the assumption that since the companies here are domestic, I mean, traded in the index are domestic, they shouldn't be harmed, and perhaps they will even benefit from such a trade war. In my opinion, that is a very short-sighted approach. I mean, they might initially, due to expectations, do so. That's why I was actually advising against trying to fade this move. But I have to tell you that sooner or later the market is going to realize that the domestic economy and hence the domestic companies are also going to be hurt by that, and probably even more than the companies traded in the rest of the indices. So I do believe that even from a macro viewpoint, this rally's momentum is based on false assumptions, and I need to stress that out. And yes, I think that the confluence up there at 171.83 is probably going to give a very nice opportunity to fade this move higher.
Now, last night, the Nasdaq went within, I think, 15 or 20 points. I had a 73.50 number, and it did make a new high, and did not confirm on quite a few time frames. And within the Nasdaq, semiconductors used to be the big leader in there, Steve, and they're not even close to new highs. So there is even deterioration in the strength.
Absolutely. And keep in mind that if we want to talk about like divergences, the Dow is by far the weakest one, right? Because we
Yeah,
have
it is.
yeah, just look at it. I mean, nothing in comparison to what we're seeing in the Nasdaq, nothing in comparison to definitely what we're seeing in the Russell.
You know how they could rally this? They could put Amazon and Google and Facebook in the Dow.
By the way,
that would pump it a little bit, don't you think?
By the way, Blake just sent me a message saying that he's going to come back in 2-3 minutes because he has something important to say, from what I understand.
Okay.
So yeah, but
I'll
he's
be
going to be
back
again
in 5. I'll be back.
So I'm
and,
guessing
and
that
we do have our have a great interview today with Sareed Harper. His handles.
What is Sareed going to talk about?
At Hypnotic. He has his own twists on supply-demand work. Work that on the online trading academy sells for $20,000 to teach. But a lot of people use, you could call it pivots, supply-demand, support resistance. But I'm interested in seeing his wrinkles on it. So I'll be back in a few minutes. And thanks, Steve.
Okay, absolutely.
So
I have more things to talk about.
For
absolutely.
Including that lazy Stelios is probably still on an island.
He is on an island.
I'd fire him today.
Yeah, sending us pictures with nice cold coffees.
Look at me. Look at where I'm at, and you're working. Okay. I know the attitude. All right, buddy.
Okay, mate. By the way, I have to say that DAX really produced a huge head fake here. I mean, it is about to break below this bottom, which actually will transform this to a double top, right? You can see it here. So if we actually break today, if we actually close below this range of support, then that's going to be pointing quite lower. So I have to point out, what we're seeing in the DAX. Blake, you're again with us, I can hear, right?
Yeah. Hey, Steve. Hey, I wanted thanks. I forgot one last thing. We had one of our traders last night. I can't remember exactly who asked me. Wanted to ask the difference between the COT report and the daily sentiment index. Daily sentiment index is something that we as a company, I say as ForexAnalytix, we subscribe to, which is not, it's much different than the COT. The COT is the commitment of traders, or basically the size that, commercial, non-commercial. Oh man, I'll tell you what, the dollar's getting smashed right now. We're seeing a pretty good move in the dollar. Ooh. The
cable at the high of the day, from what I see, euro as well, Aussie as well. I mean, we're seeing, and most importantly, because I was looking at that before, Blake, just look at the daily candle in the dollar so far.
Yeah,
I mean, it's on its way for a key reversal here.
Right. And I'm sorry, I just wanted to mention it really quick as far as daily sentiment versus COT. Daily sentiment is actually a survey amongst brokers and banks. It's a sentiment index. It's not positioning. The COT that's given out by the Treasury, it's a few days in the rears. It comes out on Fridays, and it's as of Wednesday's data.
Tuesday.
So
Tuesday close, I think.
Was it Tuesday close? Yeah, Tuesday close. Excuse me. And the daily sentiment index is basically it is a survey, and it's the daily sentiment index has been used by futures traders for years and years and years, and it's something that, especially like pre-internet days, this daily sentiment was the benchmark. And if things got too exaggerated one direction or the other, then sentiment is very strong. But it's something that we use as a complement to other indicators that we have, and it's just something that I tend to take a look at if things are extremes. Like the Australia dollar extremes have been extremely bearish sentiment for the last 2 days. So I was kind of looking for an uptick in the Aussie, the last couple of days, and we seem to be getting it right now. So and same with the Canadian dollar.
Since you mentioned it, they have one thing in common, the DSI and the COTs, that extreme readings are always contrarian indicators.
Yes. Yeah. They are. So if they're too extreme in one direction or the other, then that usually is telling us that we might need to start looking the other direction. Anyway, I just want to bring that up because it was a question that was asked yesterday in the chat.
Absolutely. Thank you, Blake.
All right. Thanks, guys.
Thank you, Blake. Good hunting, man.
Same to you.
Just look at this daily candle. Dale.
Yeah. You know what I'd really love to see, Steve, is a break all the way back down towards 92, 1.5, and this be a weekly neckline, even though we got through it at 95, and then the next big rally. So, maybe a month or so of dollar weakness or consolidation to take out the 93 level and hold above 91. And if you look to the left on your chart, that's the left shoulder. And we get some type of right shoulder here, and then it measures pretty good. I mean, it measures 102. Measures almost back to the highs.
I have to tell you that if I've learned one thing about the markets is that is absolutely nothing is impossible. But I have to tell you that I would be extremely skeptical for a move all the way up there. extremely skeptical.
I think everyone is, but
Yeah.
you know, there's some good guys that are saying that if you go back to the monthly, um, like Giuseppe Bazil, or the monthly would probably be better. That we're gonna okay.
Yeah, this is the monthly
All
DXY.
right. I was thinking more about the euro. Shows it a little clearer. It's the
Okay,
same
let's go to the
thing.
euro.
It's the same thing monthly.
It's almost the same thing.
Yeah, it's just
Euro
inverse. Yeah, okay,
weekly.
there. So he's looking, you see that big break we had in 2015 from 140 to
This one.
103? Yeah. And we rallied back to the breakdown. He's looking for something like that from 125.
Hmm.
Yeah, at
Okay.
least lows. So, I mean, he's not an Elliotician or anything, but I've seen
So,
Ellioticians looking for the same count that are looking for parity.
so something like this, you mean?
Yeah, something equivalent, or you even look at the length of that big triangle. That's a great look. I mean, that looks like it goes from 115 to 160. That's 35. 35 from 125 is 90.
Yeah, as you see, this is where I marked actually.
Yeah, okay, so that's a bear case.
Okay. Personally, I would be buying both hands the euro, at much higher levels than that, unless, of course, unless we, something big is happening that is threatening the eurozone itself. You understand what I mean? So,
What does Rega say would confirm a bearish count for him? We were talking about it last week because you wanted to know when his count, I think we had to get to a wave 4, maybe it was 14 and a half, and then he'd sell the next rally. I think that's
yeah.
what you said. Am I remembering right?
Perhaps a little bit lower, if I remember. He might have been looking for a little bit lower than 114.50, but like anywhere between 113 and 114.50, yeah. I think that's more or less where.
So that would confirm to him that's like wave 1 down, or that's
something like that. Yeah. But let's first get there, because as you see, speaking of which, we're currently on the weekly. You can see where we're stalling so far on the weekly, right? You see how important this area of support is. So
maybe it puts in a right shoulder up at 120.
Yeah, it can be. So you mean something like
I'm living in the future today.
Something like this here.
Yeah.
And then you can have like a head and shoulders formation here, breaking down.
Yeah.
Yeah, okay. Let's get back to 114.50 after doing that. And and then I'll tell you that then everybody's gonna be watching for a head and shoulders formation, and you know what happens when everybody's watching for a head and shoulders formation, right?
Yeah, the head explodes. No, the shoulder separates. A shoulder separation. Yeah. Okay.
So anyhow, look at the candle so far in gold. Just look at the retracement we're getting there. I mean, I told you that I want to cover gold as well because, for me, it was quite important that gold was approaching, the top area of the level of support I have here. And, we're not far away from this channel's support. And look at the candle so far. I mean, we're paring back the losses. If we do close positive on the day, that's going to be quite a big sign here. Let's have a look at silver as well. There it is. Silver already posting a hammer right on support area as well. So that's another. And I have a gut feeling here that platinum is also trying to hold this confluence of supports we were talking about yesterday. Just look at the last 3 daily candles. All of them have been posting lower wicks right at this level. Speaking of which, by the way, let me not forget, we released yesterday our latest blog post. There it is, on crude. So if you go to ForexAnalytix and you click on the blog, it's free for all to read. This is our latest blog post on crude. There it is. Right, we approach the crude market from multiple viewpoints. I strongly suggest that you read about it. So I'm not going to cover crude today because, yesterday's post is obviously still 100% on point. I mean, nothing has changed yet in our viewpoint. So let me go back to what I was saying about the DAX. The DAX is in danger of actually closing below this 12,600 area. If that happens, then we're talking about a range and the double top here, which is going to point quite lower. And let's have a look at the FTSE as well. And I need to remind you here that when I had sorted actually the FTSE, I said very clearly that this looked to me like a pennant. So at least one more leg down was missing. That's what I said. And we've already fulfilled this, and we're already testing the first area of support. If we actually break below here, and obviously if we see some further pound strength coming through the market, that's definitely going to help the FTSE deflate somewhat. The next area of support I would be looking for is the confluence of this horizontal support resistance area and the 200 DMA. As you see, it's the blue line in this area. That's actually the 200 daily moving average. But to begin with, we need to break below here because this is another confluence of supports. It's actually another support resistance area. And the 50 DMA is actually here, the 50 daily, simple daily moving average. Okay, so if this level holds, fine. If it doesn't, I will be looking for a move towards the 7,430 area of support. So I do think that the FTSE was cleaner. I said that since the beginning, and it actually did play out to be like this. And I do think that the chances that it's going to break from here and make it to the next area of support are decently high. So keep that in mind. Now, having to do with the Nikkei, Nikkei is still oscillating between a strong level of resistance, which is the 23,000 area, and a strong level of support, which is the 22,000 area. I do believe that no matter which of these areas break, are going to definitely extend. When we were actually retesting the 23,000 area, I said that we either reject from here and go back to 22,000. But if we do break higher, we should at least test the highs quite soon. We got the scenario that we saw a rejection. If we do break below 22,000, I would be looking for an extension lower that should be at least 1,000 points, as long as wide as this range has been. So I would be looking for at least a move towards 21,000, if not lower from there. Obviously, if that ends up being the case in for the Nikkei, we should also see, which is what we're expecting, a continuation lower for the USD yen, to at least come down and retest the 108 area. Let me briefly have a look of if we have any questions, because we had quite a lot to talk about. I know that we don't have much time, but let me see if there is something I haven't covered. Steve, what is the exact level on the IWM to short? I told you that the confluence of resistances I have here is at 171.83, right?
You better answer Stalin's questions or you're going to the gulag.
Let me see.
I wouldn't ignore Stalin, buddy. And you know what we were Skyping about. He was just as bad as the H guy.
So yeah, Stalin must have been a very weird guy in real life, I mean. And, our friend Stalin here is also asking weird questions because he wants to know about the Swiss yen, which, as you know, they have some equivalent characteristics. Last time we had a look at it, from what I see, we were down there. And I said that we might see another bounce towards this trend line. We did see another bounce, but we didn't make it to the trend line. We actually made it to the previous high. So that actually created a very nice double top over there. There it is. A very nice double top. And too bad, actually, we missed this because that was a nice opportunity. Then we broke down below this range, and we extended a little bit. We came up, we retested this range. I think that as long as we remain up below 112.50, you can easily be looking for lower levels. So 112.50 key level for the trend. As long as we remain below it, I think you should be looking for further weakness. Only if we break above it, you can be looking on the alongside of this market.
Yeah, so it reminds me of this Japanese businessman who went to Switzerland, since you're talking Swiss yen, to convert his yen into Swiss, and he brought 1 million yen, and the banker said, well, there's a lot of fluctuations and volatility in the FX market because he didn't get as much as he thought. Okay, he goes, well, lots of fluctuations and volatility. Came back with the 1 million yen, got even less, and the Japanese guy going, what's going on? What? He goes, well, lots of volatility and market fluctuations. He came back one last time and was given even less and told the banker, don't tell me I fluctuated again. And with that, I think we'll start the interview. You like that one?
Go ahead. Go ahead.
We got to have fun. Go ahead.
By the way, I have to say that the day so far is turning to be interesting, having to do with FX. We're seeing like big reversal candles. So obviously, we're going to be sending out updates on the ForexAnalytix platform. And obviously, if you have access, you are on the chat room, and you can see that we're exchanging ideas there as well. So thank you very much, everybody, and I'll see you tomorrow. Enjoy the interview, Dale.
Thank you, Steve. Nice reversal candle on the 1 hour in gold. So dollar topping, gold popping. Great entree for Sareed Harper. Sareed, I see you. I'm going to make you the presenter, and you'll be able to take control of the screen. And looking forward to meeting you and hearing your voice. Welcome to Face. How are you today, buddy?
I'm good. How are things?
Great. Very nice meeting you. I'm glad I reached out on Twitter and invited you to our community, Sareed. So looking forward to hearing your story and the way you look at markets. I'd like to start at, how did it start for you? How did you end up as a trader using support, resistance, supply, demand? Get back in your time machine and tell us about your journey. How did it start?
Well, I've been trading kind of is a secondary thing from where it was initially. I've been working with computer viruses and computer hacking and stuff like that, computer security, since about 1999. And so that was kind of.
I'll just tell you that we're seeing a blank blue screen if you wanted to show anything else.
I'll bring a chart on so you got something pretty to look at.
Yeah, there you go. Okay. Oh, nice work. Okay, go ahead.
Yeah, so I mean, I got into trading via security work because I think 90% of our customers were banks, and so I spent the majority of my time, and I still spend a lot of my time today doing security assessments for some of the biggest banks in the world, and primarily kind of core business software, so hedging, fix, liquidity distribution, stuff like that. And so I was able to look into this big black box on the sell side, which I found to be really exciting. And I first was introduced to currency trading when I had to trade a commodities and FX trading platform for one of the major market makers here in Europe. And so I had to sit one of the traders who explained to me how you trade and what a limit order is and a stop order and stuff like this. And I had no idea. And I was kind of walking through the application, looking at the application via a security perspective, but I found myself paying more attention to the constantly changing numbers on the screen, and I thought it was absolutely fascinating.
Best video game in the universe, huh?
Totally. Absolutely. You know, dollars going up and down and yen and this and that. And I thought, wow, this is amazing. So I mean, pretty quickly thereafter started to apply my knowledge within computer science, which is what I studied, to the currency trading markets. And so I started to write software, and I started doing that back in about 2010, which is when I opened the doors of Hypnotic.
What a great handle. Because it sounds like it was hypnotic to you.
Exactly.
When you first looked at it. That's what I was gathering. So Hypnotic, a real good, catchy handle.
Yeah, it is. I thought
people are hypnotized by the screen.
Absolutely. Indeed.
Sometimes it's hard. In fact, last night it was still 8 o'clock, and I was still looking at it. You know, my day started at 3:30. I'm not saying I sat in my chair all day, but even in the evening, I'll come in and check out Asia. So it is. It's I'm hypnotized, and at times I have to give my mouse to my wife to have her lock it up in the wall safe. So, go ahead, buddy. So, all right. So you started applying what you knew as a computer guy, mathematician. You know, everything's math, and you gravitated towards supply demand zones. Did you have a mentor that steered you in that direction, or a book, or it was natural, self-taught?
Well, you know what? It's I was one of probably the few fortunate people. I mean, due to my work with the banks, I was introduced to some institutional traders, and a lot of these guys were talking about very specific things. They were talking about liquidity, which I did not understand initially, and they were talking about the strength of an economy, the strength. I was like, what do you mean the strength of the economy? And they said, well, if the yen, if the key figures out of Japan are good, this is good for the yen. And I said, okay. So I kind of converted that to currency strength. And so I started to do a lot of searching for this term liquidity a lot. And this guy popped up, he kept popping up. And so I wrote to this guy, and I went to one of his workshops back in maybe 2012.
Who's the guy?
The guy is Chris Laurie.
Okay, I've interviewed Chris. Yeah, Chris is. Yeah, he's a champion.
He is. He's the real deal. And so Chris and I became good friends, and he took me under his wing and showed me the ins and outs of the liquidity distribution, which I had a lot of insight into due to my work. Mm-hmm. And and so I kind of spent a lot of time, met up with Chris quite a few times, and participated like his workshop in 2012, and that was really good. It was like a pretty intensive 3-4 days, and I learned a lot.
Yeah, I bet part of it was concentrating on Aussie yen for risk.
It was the carry.
Yeah. Okay. Go ahead.
Yeah. So that was really good. So luckily, my attention was immediately taken away from indicators and brought to liquidity, and I took what Chris was telling me about, and I used that to kind of focus on different things when I was looking at writing software. So I said, okay, liquidity. What is liquidity? Well, liquidity is
where the orders are.
Exactly. Liquidity is how quickly something can be buy or sold at any given time. And I said, well, how can you see liquidity on a price chart? So I started to study price charts quite extensively. As a matter of fact, I took the jump of faith about 3.5 years ago, where I decided to quit my job so that I could study more intensely. So I quit my job, which I don't recommend doing. We almost lost our home, but we managed to fix it. But I must say that in that period of time where I was able to study the charts for 10 hours a day, I mean, unbelievable insights came to me as a result of looking at the charts for such a long time, for so many hours. And so I started to, when I was doing this, looking at the charts, I was, of course, my primary purpose was to write software, and I'd start to see these price imbalances, these liquidity voids, and I thought to myself, well, how can I identify these using software? And so I found an algorithm that I that I wrote, and I started to slowly but surely build on this piece of trading software, which initially was called the Price Action Pro, and then now it's just called the supply and demand indicator or tool, and it focuses on finding these kind of release points. And so you have, I mean, price cannot move up and it can't move down because of filled orders. It's only moving, my optic and what I've seen while working at the banks, due to unfilled orders. And so price will typically move in a direction of thinnest liquidity, and it'll stop when it bumps into these pools of liquidity, which are typically, as an example, limit orders or stop orders at the opposing sides of the market. And so when stop orders are hit, they dump liquidity into the market. And this liquidity is typically bought up by the people who are in the know, and this drives the market in the opposite direction, which is why the whole concept of I think there's a term like stop running a lot of people refer to in the markets. It makes perfect sense, and it's not because.
Do you know my Twitter handle?
I do, actually. I do. Exactly.
So I think I know what you're talking about now. Today it's done by algos and black boxes, HFT, but when I was on the floor and there was open outcry, it was actually audible. And you're right, people would drive the market. They'd be long going into buy stops. And when buy stops were elected, that was a liquidity for them to get out of their longs and even reverse. So, yeah, exactly. It still happens. It will never stop happening.
That's right. And it's not the broker that's against the customer, the retail trader. It's just the market moving, breathing. And so it has to happen. Price has to find liquidity in order to move. And so that's ultimately what's happening when people's stop gets hit. That's why you'll see price often kind of push through a significant high or a low. And this is done because there are typically stops there. And this will, of course, dump the liquidity in the market. And then this is kind of gathered up by the opposing side of the market, which drives price towards their targets.
So I see on the bottom you have your is a hypnotic currency strength histogram. So tell us how you use it.
Well, I use this pretty much for divergence purposes, where you can. I mean, this is just showing me the difference in the strength between the Swiss franc and the Japanese yen. Mm-hmm. And so you can see that when we had this high here, we had kind of like a nice push. So we had demand for the franc and supply of the Japanese yen. So price came up here. So we formed this high, and then we had a really strong push up into this. You can see this orange area, which is weekly supply.
But you had a smaller reading on the histogram. So was that
exactly.
a divergence to you?
Yeah, so that's a divergence. And so when this happens, I mean, you don't just take every divergence trade. You have to be taking divergence trades if that's what you trade. If price is reacting on something, just trading, I think, in the middle of black space or white space is not such a good idea. And so, I mean, this is just confirmation that there's a high likelihood, the probability that price will have a bit of a bounce here. And it did. And we had a really nice release. And then we have these lows here. People are probably going to have their lows their stops close to these lows here. Price challenged those lows, and price started to drift a little bit higher. And so, I mean, I look at this strength to me as a secondary tool. I use it for divergence. Also, if I'm trading on a smaller time frame, then I'll go to, for example, a monthly chart or a weekly chart, which I spend a lot of time on, and then I'll look for kind of trends going on these time frames, and then I'll take this information with me down to the smaller time frames where I'm going to typically be placing orders.
Okay, you have a lot of horizontal lines here. So how do you know which are they different time frames, and how do you know which ones are going to be significant if you have so many of them?
Yeah, well, let me clean it up a little bit. There are kind of a lot going on there. Let me. Okay, so I mean, this is just showing the supply and demand areas on the weekly chart, and we have dotted ones here, and these are areas that have been visited. The first visit happened here. This is a second visit. This is a high probability short. This is a lower probability. supply and demand kind of also goes a little bit against support and resistance, where if price comes up to a level and tests it multiple times, it doesn't mean it's stronger according to supply and demand. Liquidity, it means that it's getting weaker because the pools of liquidity at that level are diminishing each time price penetrates an area. And so each time price comes up to this area, I want to know if price has been there before. It almost came there here. We got to there here, and we came here. And so each following time, the next time, I probably will not consider to trade this. Ultimately, you want to see price enter an area and retrace aggressively, which shows us that there was indeed bearish liquidity here. So, but if price is coming, let's go to a different time frame. Let's go to the pound. So if price is doing, actually the euro, there was something I wanted to show on the euro here quickly. Okay, so if price kind of comes down to an area like this, and it's been tested, and then the indicator drew this little rectangle just here. And this is important because price came down, we had a really strong push here, and then price for several hours sat on this area. And what's going on there? Well, this is the accumulation of orders to move price lower. And you know this once price leaves. And the indicator told me this, said, yes, we have a 4-hour area of supply at this area. And so this is the trade that was taken at this area here.
Okay.
And so
now let's not go backwards. Let's continue. So here we are now with a potential double, triple bottom, getting a reversal candle. How do you play a move like this? What would be your expectations for a move in euro now?
Well, if I look at this, you can see that we've been down to this level here before. And so first of all, I'll mark off the lowest retracement, which is here. And so once price moves back to this level here, and if we're not trending, when price starts to move against and move towards this, I don't want to be buying until price comes to at least beyond the lows of this, because price has already cleared out liquidity at this level. Price turned, it went down, and it turned from here and started to move higher. So the buy zone starts here. And if you look here, you can see we have some micro 4-hour areas here. Price tested the edge of it nicely, and it held the second test as well. So price is reacting. So we'll probably get, depending on what happens here, if price continues to accumulate around this area here, I'll be very hesitant to buy, because this would make me believe the price is going to have another push lower.
What would make you believe that?
Just like the behavior of price. If price is stuck around this area here and we get these small bodied candles at a key level,
okay.
Yeah, I would be very hesitant in, for example, buying. So I want to wait and see what happens.
You have more of a bias to sell it on strength, and what pivots would be important to you?
Let me clear the charts off a little bit, and I'll just do like an analysis.
I mean, I hope you don't mind, but
not at all.
It's easy. This happened then, and then that happened, and then this happened. Well, what's happening now, man? In this business, you're only as good as your last call.
Exactly. I'm going to show you. Okay. This is what I'll do. I'll start on the monthly chart as far up as I can get, and I'm going to look and I'm going to see what's going to happen. You can see, first of all, I asked myself.
What are we looking at?
This is the euro, dollar, and this is the monthly chart.
Okay.
So I'm asking myself, what's driving price? And so you have to identify the most recent area of supply on demand that the price has reacted at. And you can see, you can't see it here, but we have a micro area of demand down here. And I can see this because just the way these wicks look here. And if you have a look, and I'm going to zoom in. And if you have a look here, you can see that we had an area of demand, price released, it went up, it came down. And so this is a pullback. And what does a pullback mean? Well, to me, a pullback means that we're flushing liquidity. And so if price manages to come all the way back down here, then I don't want to be paying a price any more expensive than the low of this pullback. This is a nice, strong push higher. This is a less strong. We have a pullback. This is telling me the edge of the buy zone begins at the low of this candle. So if we go back to current
You mean
price,
currently?
Currently, yeah.
Okay.
And so this is what price is reacting on now. So we can.
So what is that level?
That's the. Oh, it's difficult to see on the screen. The 1 0. You know, I'm just going to go. I can't see. My screen resolution is pretty high. Okay, the one. It's the 0 3 60.
Oh, the lows.
Yeah, that's the lows.
Yeah.
Okay, so that's
So
what.
So you're saying there's support at the lows.
Exactly. Exactly.
So do you think we're going to attack that support, or do you think that was a bottom?
Well, let me finish my my analysis here. So price is reacting here, and then I'm looking at what price did when it went through there. You can see that price had a test here, and then it moved away. And so I want to have a look at this leg high here. So this is the origin of this move. So I want to have a look at this. And I'm going to have a look at the move up here. So you can see that we have the origin, which is down here. And this is the origin because, I mean, price went up and we tested it a couple of times. This is not a very impressive move. Price didn't leave from the area very quickly. So I would expect price to come down through this area and retest the absolute lows that we can see here. But for the time being, you can see we had market structure, which I can draw here, can't I? Pen. I'm just going to draw here. So I'm going to try and draw these swings. They're not very clear. So we go up and down and up and down. And so if I want to draw a defined market structure, the structure of price, I'm going to take the clearest swing points like so. We have one here and we have one here. So I'll remove these. Oops. And now I'm going to take a trend line. I'm going to draw it from here to here, roughly. Not a perfect science like that. And then price went up. And so we had price managed to break the structure of market. And so you have to ask yourself, well, what area of supply caused market structure to fail? It's this one did here. So this is the area here that is interesting to me initially. And so we have this area of weekly supply that's driving price. So this is big. I mean, weekly supply is big. It's a really strong move. When price left here, we managed to move through. First of all, we have this is nice fresh demand. So I'm expecting price to come down to the 114.40-ish area. We'll have a bounce, but keep in mind that just below we have this one here. So we have a couple of. Let me remove the rectangles. So I have to do the work myself. Goody. We have another one here. Good. And so price went up. We're approaching this one here. I like this one here, but it's not too clear. So I'm going to go to the smaller time frame. I'm going to have a quick look there and see what's going on. And you can see here that within here.
So you're always looking left.
Yes.
Okay.
And so if you look here we had that pullback. We had a strong move and we had price coming back. What does that mean? Well, to me, that means I'm not going to pay a price any more expensive than the, I can't see. I'll tell you what, you get over 40, your eyes start to fall to pieces. Let's see, the 112.94. So that's an area that I would be very interested in buying. So that's my low there, just down here, around the 11300 area. Okay. Close enough. And this is interesting because we have this little area here. And this one is a little bit messy because if you focus on supply and demand, you have to know that if price is moving sideways like this, well, that means that there's a balance in supply and demand. And that's what you don't want to see. You want to see an imbalance. You want to see price rally, accumulate, and then leave quickly. You want to see very, very quick approaches and very quick departures. If price is hanging around in the area like it is here, then I'm going to feel much more inclined to look lower, which is why I didn't draw this area off. I drew this one here. And so you can see the price around. Let me zoom in. It's not very clear, maybe. So price, we left here, we went higher, we came down, we tested it, we came up. You see there's a lot of agreement in the price of the Euro USD at this level here. So price is pretty busy accumulating. Price pops up, but we have this here. So we had price that came back to this area. Oh, damn it, my eyes. Could have changed its color, which is the one.
Okay, buddy.
110.50.
Why don't we do this? Now's a good time to show your website. I went to your site, nice looking site, and what you have to offer to people and how they get in touch with you, Sarit.
Mm-hmm. That's totally fine. Let me before I do that, I just want to show you
make you a nice little commercial.
Yeah, good. Before I do that, I just want to show you some results.
Oh, okay.
This is over the past. What account is this? The 88. This is the past 1.5 months of trading. Got quite a few accounts. I shan't spend too much time, but I like you said, you like to scale into positions. This is something I'm doing more and more because ultimately I like to get a better and better price for whatever I'm trying to buy. And so you kind of drop in a slice of an order. You see how it goes. If price keeps moving against you, then ultimately you want to try and get in at a better price. Okay, and so so this is what I really try to do. And you can do if you trade supply and demand, and you spend, of course, your time on the major time frames, so you know what is driving price, which is absolutely crucial, which is ultimately the economic data, so the interest rate swaps, swap differentials, and stuff like that. And you do your analysis. You find out, okay, we know that on the weekly chart we should be buying. You take that information with you down to the hourly chart or the 4-hour chart, whatever chart is that you want to trade on or you're trading on, and you have a bias. And this bias is ultimately what is going to enable you to get much better results. Okay. So you can see here, I mean, this is the past just under 500 trades, and we have a hit rate of 99.4% on the shorts and 80% on the longs. So we have a high degree of accuracy here. We have another account here, 326. As a matter of fact, this algorithm, or not this algorithm, but this method of trading is something that I've attempted to automate. And so I have a robot running on a small account. I'm just going to show the results. This is a small live account. And here we have the past 3 weeks of trading. It's 100% automated, a tremendous profit factor, 10% within the past almost 3 weeks. We have a really good hit rate on our trades here. We have very small drawdown, under a percent so far. And so the whole way of identifying these key areas in supply and demand can be done, of course, using code, which is what I've done. And the software that I write is exactly what everything is based on. So the engine comes from discretionary tools that I showed earlier on. And this is the website where I operate. So if you're interested, you can come here and you can have a look around. We do a lot of I write a lot of blog posts about various things, typically supply and demand and currency strength. But I also have my algo trading projects, video blogs, and stuff like that in here as well. So it's a pretty exciting environment. I mean, at heart, I am a programmer, and I think the financial markets are a splendid way to kind of express that creatively. And I think it's a very fun travel. It's a very fun trip.
Yeah, outstanding trading, Sarit. So what do? You sell a copy of the robot for people to trade? What's your business model?
No, it's like a monthly subscription for the software. Yeah, and so we have,
got it.
Yeah, and that's it. So you mean the currency strength tools and the supply and demand tools. The robot is not. I'm not. Liability
not
issues and
perfected.
stuff like that.
Yeah. Oh yeah. You're not. Okay. I understand.
Yeah.
I mean, even the robot in Lost in Space broke down on Will Robinson and Dr. Smith, and I'm sure you don't remember the television show, but that's the only robot I really cared for. So anyway, it was great meeting you, buddy, and congratulations on finding your way into trading by accident.
Yeah, it's
You know, all
it's
the good
pretty
things
exciting.
in life are accidents, aren't they?
That's right. As a matter of fact, as you might recall from our correspondence, we're in the process of moving to Indonesia. Currently, I live in Copenhagen in Denmark, and I'm
Yeah.
gutted that it's 1-1 Aussie Denmark.
Oh yeah, yeah. All right.
Formula One. Yeah. So I mean, if you manage to harness the beast, tame the beast, then you can do
Live
whatever
anywhere.
you want. Exactly.
Yeah.
And
Yeah.
we're moving to Indonesia in about 3 weeks, so we're all
Where
dying
about?
of stress at home. The island of Bali. There's
Oh
a
my
school
gosh.
there. Yeah, there's a school there. Check it out. There's a school there called the Green School. And this school is very much focused on sustainability, all the way from the kindergarten class and all the way up to the 18-year-olds at high school. It's a phenomenal school, and it's situated in the middle of the jungle in Bali. It's completely phenomenal. So we went there. We spent the winter there last year. We visited the school, and we said,
Fell in love.
yeah, we were a bit like, we have to get our kids into this school. So we started to fill out the paperwork, and yeah, the sun shone on us, and so yeah, so we're selling everything we own, and we're heading out in 3 weeks. So
There's a trader, not risk averse, and leave your comfort zone.
Absolutely.
So living the dream. So Reed Harper, get in touch with him at Pipnotic on Twitter, and check out his website. And very nice to meet you, buddy. You're now my Trading Warrior brother.
My pleasure, Dale. Thanks so much for having me.
All right. Enjoyed it. Thank you so much. And may your program and people that use it and your tools, may pips rain down on them as they do, and you and your family in the jungle.
Thanks so much.
All right, buddy. All right,
All right,
everyone.
cheers.
Thank you again. And everyone, that's a wrap. I'll see you for TGIF. And remember, don't just count your pips, count your blessings. See everyone tomorrow. Thank you again, Sareed.
Thanks so much for having me.
Adios.
Cheerio.